Welcome back, everyone. Today, I'm going to give an update on Tesla stock. As I've said before, this is my heaviest position with over 1,000 shares of Tesla. I've been dollar cost averaging into this stock since 2019, and the stock has had some big news come out, which makes me very bullish and believe that over 1,000 per share is very possible later in 2021. I'm going to lay out 5 key facts that you have to know about if you have Tesla or you're going to be adding Tesla, because I think this information is the most important for driving the stock higher that we need to pay attention to. Real quick, if you're new, my name's Henry. I worked for Goldman Sachs and other Wall Street firms, but now I educate others on YouTube and I do research on stocks that I want to buy for my personal portfolio. So I also want to share these picks with you guys so we can all share and get stupid rich together. You can check out my link for my Patreon in the description below. I have live daily plays there, and I also have a private Discord that's separate from Patreon where I do daily option plays. So this analyst on Wall Street named Colin Rush of Oppenheimer, he recently went on CNBC and placed a $1,036 price target on Tesla stock. He stated that 800,000 vehicle deliveries is what he expects, and he is a top 5-star analyst with consistent huge returns.
Yeah, we're not calling for that big a number just yet. You know, we're just below 800,000 vehicles for the year at this point. And so that's really not a big stretch for this organization. We've been a little bit conservative around a bunch of the logistics challenges for all of our companies as we entered into this re-ramp, given what we've seen with some of the shipping and as well as some of the component supply. And so, you know, that's certainly within the realm of possibility for this organization, given the capacity at the factories. And really it's going to depend on how well they manage some of the components and some of their really essential elements like battery supply, as well as IGBTs, MOSFETs, and as well as the chip shortage that everybody's managing right now.
Once we see the market pick up, whether it's because economic data comes in bigger than expected due to the growing money supply, or an earnings beat later this month, which Tesla just announced, Tesla is going to retouch its highs very soon. 1,036 is what the Oppenheimer analyst has the stock, and for me, I'm expecting 1,000 per share, so him and I are in the same ballpark here. What most analysts and investors are sleeping on is Tesla's ability to ramp up production quickly. Tesla started out 2020 saying it expects to deliver 500,000 vehicles for the year, a number many thought was ridiculous, but Elon ended up delivering the goods. The company delivered 499,550 vehicles, just 50 vehicles short of Elon's goals. What I like most about Tesla, first and foremost, is the numbers that Elon is giving out are high and ambitious, yet everything he has said he's going to do, he properly executes and delivers on his words. That said, Tesla does have a significant amount of growth baked into its current share price. Lately, Tesla and other EV stocks have stalled out just a bit. However, if you look at the Tesla chart right here, you can see that it's pushing that $700 mark, and I think it's just the beginning for investors to realize that Tesla is not going to stay this low for long. Tesla staying below $700 per share is a very little concern for me. The stock's price to sales valuation does clock in at 23. However, given its accelerating production capabilities, the price target that the Oppenheimer analyst came out with is what I believe is a moderate price target, and it's not even a stretch price target before Q2 and Q3 earnings come out. Tesla production is special because Elon has found a way to deliver vehicles like hotcakes while also keeping vehicle gross margin at a near 30%. One piece of evidence that I have that's likely a strong signal for gross margin but also vehicle demand is Tesla's recent price hike. According to Tesla's website, the increases come with a slight interior update. The Tesla Model 3's starting price went up $500 to $38,490. The long-range AWD model rose $500 as well to $47,490. And the performance model's price rose $1,000 to $56,990. The long-range AWD Model Y's price got a $500 bump as well to $50,490. There is a chance that the price increase is coming due to increased commodity price inputs, but I also believe that Tesla feels confident in the increase due to demand that they are forecasting by their internal analysis. I'm guessing it may also be a mixture of inputs and demand here. However, what I find interesting is that they have raised prices 3 times in the past month. Another very well-known Tesla analyst, Jed Dorsheimer, recently upgraded the rating for Tesla stock from a hold to a buy, and he raised his price prediction from $419 to $1,071. What I find very interesting is so many more analysts now are coming out on Wall Street and they're saying that they believe Tesla has opportunity, but they're also raising their price targets beyond $1,000. and this is just the beginning. This is what I believe is going to be a trend for many more analysts to realize that the fundamentals of Tesla, they seem outrageous on the front side, but they're actually very reasonable if Tesla continues to deliver the performance that they have been able to do. So then you may be wondering, why is this the case right now? Why are analysts changing their price targets right now so recently? The analyst cited that Tesla's moves into energy generation and storage business was a big opportunity for the stock, and believes that this accelerated growth within the facets of their business could lead to an estimated $8 billion of revenue by 2025. Not only does he foresee this, but in addition to his bold claims, he made it clear that his belief that the gross margins will be equal to or greater than the EV business, which is again around the high 20% levels, near 30%. I need to be clear that most investors are just looking at their vehicle business and not the other facets that Tesla can dominate, like energy and other areas that I'm going to mention later in this video. Next area I want to mention before I talk about the biggest opportunity for Tesla, which I will get to in 1 minute, will surprise you, is the insurance business. This is a no-jokers part of Tesla that people just don't realize how big an opportunity it really is. Warren Buffett built his fortune from collecting premiums with Geico Insurance and then using that money to reinvest and make returns with all of the float that he was collecting from the insurance premiums. Insurance is the #1 business in the world, guys. #1 business that I can think of is insurance. You collect the money up front and then maybe, just maybe, you pay all of it out in the worst case scenario, or in a better case scenario, you pay a small part of it back in the future. Not even today, you pay a small part of it back in the future. Tesla has a vast quantity of driving data, and I'm most excited about their insurance segment. This is a profit pool. This is when I was looking into getting a Harvard MBA and I was reading all of these Harvard case studies that I was reading, that some businesses generate an enormous amount of profit in a very small part of their business. However, that part of their business is so lucrative, and that's something like insurance. And here's why. I know a lot about actuarial science, which is basically a math degree in calculating risk. Actuaries at insurance companies cost $150,000 up to $500,000 or even $1 million if they're very senior actuaries. I know an actual actuary that I've talked to, and what I think Tesla can do is using artificial intelligence and machine learning with the vast amounts of data that they have, is that they can calculate risk and offer their customers car insurance without having to need all of the costly actuaries under their payroll. They can offer their customers car insurance at a discount while being very profitable to their own books. Just like Lemonade, the renter insurance app that I'm sure some of you guys have already heard of, Tesla can have a similar automated app for its customers, or even if the Tesla vehicle itself offers a car insurance option to the Tesla owner inside the vehicle, that's going to be a huge opportunity. Since they can track the owner's data, they know exactly how much the driver drives, what location he's in, and other valuable data to measure the chance of an accident. This way, they can offer a package that the driver can't refuse, since it's going to be very economical compared to the competition. And Tesla collects so much large amounts of data that they can actually understand how much of a risk this customer is going to be, and they can still make a profit. At worst, even if Tesla makes a very razor-thin margin, since there is no cost of goods sold, think about it, guys, insurance is a product, but it's not a physical product. It doesn't have any cost of goods sold. That means if Tesla collects $100 and it just pays out $99, that is $1 created for them out of thin air, completely thin air. That's why I studied finance, because it's so interesting how money is created, and sometimes, especially within finance and compounded interest, money can be created, and it can be created so much faster and quicker than so many believe. And in this example, $1 is actually an infinite gross margin in a sense, because there is no cost of goods sold. So for every vehicle, if Tesla can just profit, let's say $1,000 per customer who upgrades to Tesla insurance, and 50% do so, that's $400 million of profit on the 800,000 vehicles that are going to be estimated to be sold this year. I'm not even getting into or counting the existing customer base that already has a Tesla vehicle. We can double this figure to 800 million or even $1 billion if you factor in the existing customer base. Or in a different way, this is really going to blow your mind. Tesla's gross margin is 27 or 28%, let's say, give or take. And on an average vehicle, they're profiting about $13,500. Now, since the insurance can pull in an extra $1,000, let's say, and it's all pure profit, you can consider that the profit per vehicle is not going to be $13,500 anymore. It's now going to be $14,500. And if you take a look at what that actually means, that's a 7.4% increase to the gross margin. Those couple percentage points over the long term increase the present value of the stock to some insane levels. That's why I believe any mention of Tesla insurance in the stock is going to get a massive lift to the valuation, since investors who are actually sophisticated, they're working on Wall Street, they're creating these models and they're looking at how much Tesla can generate in terms of bottom line profits. And if they're able to generate high gross margins from the insurance business, that's going to make Tesla as a stock significantly more attractive to Wall Street and bigger hedge funds. Last mention is FSD, or full self-driving. Tesla owners are getting very excited and hyped about the FSD, and Elon tweeted that FSD beta has now been expanded to 2,000 owners, and we've also revoked beta where drivers did not pay sufficient attention to the road. No accidents to date. Next significant release will be in April. Going with pure vision, not even using radar. This is the way to real-world AI. On March 6th, Elon tweeted about adding a download beta on-screen button to Tesla's car touchscreens in 10 days. While the button is stuck in process, he also disclosed that the next big software release for the automaker's vehicle will be in April, so we can at least expect the expansion or the availability of FSD beta software beyond today's selected group of owner testers and some employees to come in the very near future. FSD is like the checkpoint you have in a video game before you face the big boss being fully autonomous robo-taxis. Tesla's proposal to sell FSD at $10,000, along with the overall trend of self-driving and other reported potential spin-off businesses for the company, is going to be a game-changing aspect to any investor holding this stock. So many people would love to have extra time or productivity if their vehicle can take them from point A to point B. Tesla is collecting more data than all of its competitors combined. This is no joke, since data is the key advantage that a company needs right now, especially in this decade and for many decades to come, to really destroy the competition. That's why they're going to win in FSD sales, vehicle sales, and market penetration. This stock will basically make you stupid rich, and I plan to hold it myself until 2025. Regardless what happens, I really don't care how much this stock fluctuates. I'm going to be holding it long term. And if the price fluctuates, that's no problem. I'm going to be taking advantage. Every Monday, I sell put credit spreads on Tesla or NIO to add more premium income to my portfolio, along with the Patreons who get live updates from me every single day during the market opens. Make sure to check out the Patreon link below and stay tuned for more videos. If you want to see me reveal my Tesla position and discuss my purchase points, why I got into Tesla at certain points, and how I'm playing it for the future, just let me know in the comment section below. Thanks for watching. Be aggressive in learning, but be safe in investing.